Hi, morning everyone. Welcome back to Morning Kappa. Right, so okay, if you see these S&P 500, well, it rebounded around 1.2% on Wednesday session after Trump de-escalate the Greenland crisis, confirming that he will not impose a new tariff on Europe and has reached a diplomatic, I would say, framework, right, which also removed the immediate trade warfare. So, yeah, well, the broader market rallied. Netflix was a surprise drag yesterday, despite beating the earnings estimate and crossing above the around 300 million subscribers. So I think the stock dipped as investors saw news on concern about the slowing revenue. So for the S&P 500, well, expect a rally to face a test today with the release of the economic data such as the jobless claims and also the GDP data. And also if the I think if the economy looks too hot, yields might spike again and cap the upside towards this 6,950 resistance level. Right, so for the US trading stocks that we have published yesterday, so we published NOC, Northrop Grumman, right? So the stock is experiencing a pending breakout formation at the $660 level, and now we can expect the stock to travel higher towards 680 the level on a strong momentum, followed by the next resistance at $695 level. And now if the counter reverse, right, do watch out for the 645 dollar level for the immediate support, as it could indicate an initial trend of reversal. Also, we have Halliburton here, stock code HEL. So looking at the charts right now, also, it is on its pending breakout, but the counter charted a high market structure, forming a higher low right here. Aiming for this $33 level to be breached, and the first resistance should be at $34.70, followed by $36.40 level. So now with the stock to slide lower below this $31.30 support, this could signal a shift to a bearish structure. So for the US trading stocks, right? So we have two pending breakout, which is NOC together with HAL. Right. So for the China A50 futures, well, yesterday, it was lower, right, but rebounded on the evening session after Trump announcement on the canceling the Europe tariff threat, right? Remove the major trade warfare, which also sparking the relief rally across the global market. So yeah, I believe that the recovery was also fueled by the surge in Hong Kong tech stocks, right? As bargain hunting aggressively bought the Tencent and Meituan, also betting on the recent sell-off was over done. So for the A50, right, do expect it to follow through to at least 15,200 or 15,300 to target or to aim to this trend line, right? As the removal of the tariff trade gives the traders a green light to buy back the export and also the tech stocks that they sold earlier this week, right? So for the WTI futures were rebounded to somewhere around $60 on Wednesday session, right? As again, Trump de-escalate the Greenland story, right? Also, which caused the US dollar to drop, and also sparking the broad commodity rally. So, yeah, the upside was built fundamentally by the halt in Kazakhstan oil field, which also due to the power disruption and a massive surge in natural gas price as the US winter storm forced to switch to oil for heating. So for this uh, crude oil, WTI futures, right, expect it to experience a slight pullback, right, before it could aim higher at $62 and also $65 for today's session. Right, so looking at our Malaysian market, well, the KLCI rebounded yesterday to close at 1705.81 points. As I think as the foreign fund return to the uh, I mean to buy the dip in these banking stocks like Maybank, you see right here, public CIMB, right, led the recovery and also stabilizing the index after the recent sell-off. Also, a major boost also came from press metal, if you see here, which surged after the global aluminium price spike on on some of the exchange, right, signaling a commodity play rotation is on the way. So for this KLCI, what you can expect is a positive momentum to continue at least towards 1720, 1715 level, right? Sentiment from the uh, Trump tariff relief, give the local exporters a green light again. And also similarly, uh, this similar move, right, was seen on FKLI yesterday as investors gain a bit of confidence resulting from better sentiment. So for now, we still keep our 1730 and also 1750 1750 resistance and remain our positive trading bias unchanged, right? So yeah, I think majority of this stock sector rebounded yesterday on a better market sentiment, which drove the market higher. And if you see here, the tech sector led the gains by 1.5% higher yesterday, right? Yeah, also talking about press metal just now, right? If you can see here that the volume times price or the value is much bigger right now. And yeah, from yesterday's session, you can see here that the counters charted a bullish Marubozu candlestick together with high volume and also technical indicators are supportive with MACD crossing above its signal line. And now you see RSI is trending higher. So yeah, since the stock reached its new high now, well, I'm using this Fibonacci projection tools. And from here, we got a new resistance, which now I'm looking at somewhere around 7 ringgit 60 cents, 7 ringgit 80 cents, together with 8 ringgit. So, yeah, the overall broader picture is still bullish, but we do not rule out for any pullback to happen, and we lock our support at 7 ringgit and 15 cent. Also, you can see here our analysts still have a buy call on press metal. Right, so this is our watch list for today. You can take a look at tech sector. We have Putra, MPI, Tech, Pentai. And for consumer, maybe things that we noticed yesterday is farm fresh, right? So for our Malaysia trading stock, our Malaysia trading stocks, right? We have Unisem, right? So the stock is on its breakout formation, higher at this 3.45 level on a strong volume. And with that, we expect the momentum to keep bullish and the stock able to propel higher to test the next resistance at this trading at 60 cent, followed by trading at 70 cent level. So if the stock to clear below this 3 ringgit and 35 cent support, this could reverse the course and trend lower. Right. Also, next we have Fresh or FFP. as I mentioned just now. So the stock also is experiencing a pending breakout at this during an 85 cent level, right? So if the stock to keep or to remain its bullish momentum, we expect the price to reach somewhere around 3 ringgit, and the next resistance at 3 ringgit and 15 cent, uh, with a high volume coming session. So yeah, keep an eye at 2 ringgit and 70 cent for any attempt of reversal. And lastly, for our FCPO, well, it trended higher at to close at 4154 on Wednesday's session after the cargo surveyors reported that the export rose somewhere averaging somewhere around 10%, um, reversing the negative trend since the negative trend which seen earlier this month. So buying interest was further boosted also by the drop in the production estimates, which due to the seasonal factor, you know. Yeah, I think this convinced traders that the supply tightness is real enough to counter the Indonesia B50 mandate delay, right? So for this FCPO, expected to test the resistance of 4180 ringgit today. Um, yeah, I believe the positive export data has put the floor to the psychological 4,000 level, and the market is now chasing the rally in the soybean oil market also. So we still have a negative trading bias for now, but if the market cross above or cross out our stop loss level at this 4180, we change to a positive trading position. So yeah, I think that's all that I have for today. Thanks everyone. Happy trading, and I pass the floor to the next presenter. Thank you.
Yep. Thanks, Aiman. So, morning, everyone. I will be presenting an update on the auto sector. So, just a quick one on auto TIV and also some other news for the sector. For TIV 2025, TIV is another record year for car sales with recording 821,000 units, which is plus 0.5% year-on-year increase. The increase was mainly driven by non-national marks, which are the likes of your Chery and also BYD. Meanwhile, local players like Putra and Proton have also recorded a 0.5% increase and also 3% increase year on year. Moving forward, I think after 4 consecutive years of growth, I think it's safe to assume that TIV is likely somewhat to soften. And as such, we maintain our 2025 TIV assumptions of 805,000 units, which implies a slight 2% year-on-year drop. So other sectors, other updates on the sector is that I think just yesterday, there's news on the OMV revision, and post July 2026, there will be no more price hikes for the local car players. So the president of MAA mentioned that the impact will be minimal and close to zero. I think for the CKD players, for the local players, it's just BAU, but it should provide a relief to them, given that this issue had been going on for so many years now, and now it's a done deal. I think that's for the OMV part. And then moving forward for the EV ground, I think the projectile now is moving towards CKD EVs, and I think most players have started to set up shops in Malaysia, and this is including the likes of your Xpeng, which has partnered with EPMB Melaka, BYD in Tanjung Malim, and also some other brands. But I think EV's outlook as a whole is a bit of a mixed outlook for now. Given that depending on how fast the EV players can set up shops here in Malaysia to qualify for the tax exemptions. And most people have asked me about Produa EV. Yeah, there's still no official booking numbers yet. But I think based on my channel checks with some of the dealers and also based on what I read through social media, I think they are targeting initially to produce or to sell about 500 units monthly. And then when I did my channel checks, and it seemed that the interest is somewhat of a lackluster interest. And then when I look at JPJ numbers of cars registered, so far, Produa has only registered for about 38 units for its QVE. But of course, this is a very early stage. We don't know how the momentum is going to be. But from my perspective, if the interest is super good, then Produa would have announced the bookings or the numbers much earlier. Yeah, but of course, once again, this is a very early stage. We'll see how it goes. Yeah, so overall, we still maintain a trail with a slightly lower TLV. Yeah, that's all from me, everyone. Thank you so much, and I'll pass on to the next speaker.
Thank you, Iftaar. Thank you, Iftaar, for the presentations. Good morning, everyone. So today I'll be presenting about SD Guthrie on behalf of Leland. Overall, we maintain our buy call on SD Guthrie with an unchanged target price of 6.95%, 6 ringgit at 6 ringgit 95 cents, which implies a 24% upside, with a 3% FY26 dividend yield. So following yesterday's SD Guthrie's Investor Day, we came away with more confidence in the group long-term prospects. Earnings growth is expected to be driven primarily by improvement in the upstream divisions, alongside value unlocking initiative, while the downstream segment continues to face margin pressures, which management plans to address through product and service differentiation. So first thing first, the upstream divisions, management is clearly focused on yield improvement for FY 2026. So productivity gains are expected to come from first, sufficient labor availability, second, favorable weather, third, operational efficiencies, and the most important one, the fourth one, is higher yields from replanting with Genomic Select seeds. So in FY26, SG Guthrie is guiding for stronger year-on-year FFB growth, which they put 40% target for Indonesia, more than 5% for Malaysia, and 5% growth for its plantation in Papua New Guinea and Solomon Islands. So this improvement reinforces our positive outlook on the upstream earnings momentum for FY 2026. And on top of that, SDG also outlined its country-specific replanting targets for near term. So for Indonesia, SDG targets to replant 5 to 6% of its planted area through FY 27. For Malaysia, they target to replant 6%, and for PNG and Solomon Islands, they target to replant 5% to FY 27. So this is for the purpose of lowering the average estate age profile. So moving on to the downstream segment, the operating environment remains challenging due to oversupply in its key markets. For example, in Europe and also because of the heightened competitions. But however, SD Guthrie continues to differentiate itself through its strength in supply chain security, sustainability, and food safety, and lastly is product innovations. So the key catalyst here, it would be commissionings of a new 450,000 ton per annum refinery and specialty fats plant at the Semangkir Special Economic Zone in North Sumatra, which is expected to be operated by mid-2026. So this facility will allow SD Guthrie to capture more value by processing output from its nearby plantation, which are currently sold to third parties. So lastly, on value unlocking, SD Guthrie is well positioned to capitalize on development agenda driven by both the federal and state governments across Selangor, Kedah, Perak, Melaka, Negeri Sembilan, and Johor. So to date, the group has announced 10 agreements covering 15,000 acres, with projects at various stages of progress. And the company has re-emphasized that its EBIT target for FY 20 for the next few years is to recognize 500 to 700 million for EBIT per year. So in conclusions, we make no changes to our forecast as we have already factored in the 500 million EBIT contribution from the value unlocking. So our TP is based on our unchanged SOP based on target price of RM6.95. And it also complement with this 4% ESG premium. So this is to reflect SD Guthrie strong sustainability positionings. So that's all for me. Moving on to the next speaker.
Thank you. Hi, morning, guys. This is Vanessa from warrants team. So we are very happy that we have issued 17 new warrants. It's our first batch of warrants in 2026. Okay, so all right. So I'll just share on like what actually happened yesterday. All right. So yesterday we actually saw our latest warrants. Sorry. Okay, so yesterday we have seen our latest warrants, Zetrix CAV, has been sold out. That's actually 48 million sold. So it's currently low on inventory. In this case, you'll be noticing the white bid price and ask price like 8 cents and 10.5 cents. So this is for I mean it is in a way to tell you that this is currently low on inventory and sold out. All right, so besides from that, which is notable would be P Metal, Press Metal C2K. So it's a call warrant. So Press Metal, as Aiman actually has shown on the past performance and also his view upcoming. All right, so Press Metal call warrant, C2K, which is new one. It actually gained by, I'll show you later. All right, so the effective gearing it was around like 5.2 times as of yesterday afternoon. Okay. So some other names like Me C39, CIMB C2J. CIMB C2J is also one of our latest warrants that just issued yesterday. So it was also highly traded yesterday. All right. So these are the press metal active warrants, press metal warrants in the market right now. So besides from RHB, we definitely have other players in the market as well. So press metal C2K was the latest, so we issued yesterday. So it's actually one of the warrants with longer expiry date. The expiry date will be on 27 July. Okay, so that's nothing. Okay, so how do we actually look at what kind of warrants to choose? So for some of us, we will actually prefer, like for example, me, I would prefer to look at warrants that is slightly out of the money, at the money, or maybe slightly in the money. So we actually look into the exercise price a lot. So if we compare RHB press metal warrants side by side, right, C2K and C2D, C2D is not a very good buy already because it's expiring very soon, next month, and also it's very deep in the money. The exercise price is only 5 ringgit and 70 cents. So with this, you will actually notice very expensive the warrant price in the warrant price as well. Yeah. So for press metal, okay, so yesterday press metal increased by about 2%, right? So due to the gearing the effective gearing, the leverage exposure for press metal C2K actually gained around like 13%. Yeah. So in one day it gained about 13%. Yes. So these are the new warrants, the 17 new warrants that we issued yesterday. All right. So however, please stay tuned on some of the announcement that we're going to make today because we might have more warrants soon. Okay, so as Aiman said that, Aiman also mentioned that today we can actually look into tech sector. Then DNO C26, Inari C4I, and also Netgate C6 would be from the technology sector. And if you are looking in some of the developers or construction companies, then you can look into SP Setia C1G. So SP Setia C1G is currently priced at the exercise price of 83 cents only. Okay, so if SP Setia is moving, the mother share is moving, then you will notice a bigger movement in SP Setia C1G. Right. So upcoming next Thursday, we are going to have a webinar at night. All right. So I have actually shared the link on Facebook comment section, or you can actually scan this QR, but this QR is very small, but stay tuned on the Telegram announcement. And if you have not subscribed to our email newsletter, you can do it. You can do so. All right. So this webinar, we want to do it differently. All right. So we are definitely tired of what our call warrants or our put warrants. So for this webinar, I'll be speaking more on the similarities and also the differences between structured warrants and options. All right, so everyone be thinking, oh, hey, currently, US market is really hot. People are buying options, selling options, and so forth. What are the differences between call options and call warrants? Yeah, so in this session, I'm going to share with you the similarities and also the differences so that your knowledge learned from warrants or slash warrant knowledge that you learn from the options market can be used in both markets. Yeah, so that you can make money from both of the markets. Right, sounds very good, right? Okay, so we'll see you next Thursday at 8:38 p.m. So please help me to register. And that's all from us today. Thank you so much for dialing in. We hope you have a good trading day today. See you tomorrow at the same time, RHB Morning Cup at 8. Thank you.